Thank you. So good afternoon, everyone. I'm Valentine. I worked at nChain, and I'm sorry, I'm actually French, so I speak English, but I don't speak Polish, so I hope my English will be fine. So I work for nChain. We are one of the leading research company on blockchain. We actually run and secure BSV blockchain, and we also built second layer solution and third layer domain application for industry. So we run into conversation with the Blockchain Polish Association on questioning ourselves where actually digital asset and Web3 can bring value for enterprise. We share the vision that Web3 could be increase adoption for blockchain if enterprise actually implement blockchain as a utility in their solution. We don't believe in such thing as blockchain value itself, so we believe it should be for enterprise and it should be developed as a blockchain utility. So we were wondering with the association on how Web3 can actually generate new source of revenue for existing business on their traditional path and journey to digitization, and how they can sustain long-term engagements with their customer. That was not an easy question, but the first question we were wondering is what makes Web3? There is a lot of announcements, misconceptions, rush, a sense of emergency in building Web3 technology and solution. So we thought it would be interesting to wonder what are really our understanding of Web3. So of course it comes with digital assets and tokenization, the ability for individual to trade digital assets in a fractional way and dimensions where they can fragmentize assets and gain access to ownership. But secondly, they should be able, of course, to have a peer-to-peer way of exchanging this without central authority and in a way that is secure, immutable, and erasable. You cannot erase. And it should be inclusive and accessible, and it should be distributed as well, because this is what is Web3, where you have inclusion, accessibility in a very public and decentralized way. The last point I'd like to emphasize as well is, as being presented this morning by Agata, Web2 includes as well a lot of shared in values. You have new ways of monetize data. So you have, it's not only one-sided to the business, but it's also online content creator that could be users or those who actually use your platforms, generates reach, engagements, volume traffic, should be as well rewarded for the participation to this economy. It should not be anymore one-sided oriented by shareholders' vision, but also by the community that actually maintain and built the project. So this is what we understand as being Web3. So could real world value, that was the original question I wanted to ask, be backed by digital assets? So we're going to discuss about tokenization, how asset tokenization can generate new source of revenue for existing traditional business, how you could also tokenize service and add value in experience, value for your users, value for your clients. And lastly, one of the most questions, digital assets being, of course, central bank digital cash. So how can you create a pure digital form of cash that allow peer-to-peer exchange without the needs of traditional banking infrastructures? And we believe this is also a virtuous path to reduce inequality by giving access to the digitized economy for the large amount of population that is still left unbanked today. So the first question about tokenized assets, so how you could generate new source of revenue by increasing and growing your customer engagements. So at nChain, we do not have a domain or business itself. We built a solution for enterprise based on our technology and our portfolio of patents. And so one of them is, of course, the e-certificate. So e-certificate could be associated to multiple of things. It is backed by a public blockchain, BSV, and it could be ID, it could be products, could be service, and it validates the authenticity of the products. So you have a certificate of authenticity with provenance and origin, whatever ingredients it is, whatever is the components of your products. And it could be associated with an NFT or even a digital twin that are backed on the public blockchains. In terms of revenues for you as a brand, you increase your customer protection. You also optimize insurance by having assets that are certified, backed on the public ledger. You have anti-thief recovery with the possibility to update your certificates, anti-fraud, anti-forgeries. So those is obviously generating and protecting your interest as a brand. The last point is also you optimizing your second-hand markets. When those assets are resell, you can actually apply royalties and margin on the process, and also gain access to these secondary markets that you couldn't in the past. Those certificates associated to a physical asset, a physical value, could be displayed on the metaverse or any platforms. They will be generating value by encouraging users to add comments, to add notes, to add, for example, tasting notes if it's a wine, to have ratings if it's a product of a service. Those persons that actually participate to your platform should be rewarded for it. Implementing a solution that guarantee nano payments, micro payments in a high throughput capacity could help you to improve your business as well and your customer engagement as well. Your online content creators will be rewarded either with future purchase program that you will be helping you to gain brand visibility, and you will have added value for user experience. As I mentioned in the third part, brands could also apply royalties or trace along the products. So if an e-certificate is associated to a physical products, you could apply a percentage of the margin, whether you want to apply a small one as a royalty, or you want, at the contrary, to avoid speculation and have increasing royalty with, of course, implementation of smart contract or automated arrangement, as we prefer to call them. The having back solution with public ledger solution, blockchain technology, is a perfect utilization for how you develop loyalty programs. So whether you generates revenue for content creators or for assets owners who get rewards when they consume your products or use your products or buy your products, the idea, of course, is to provide experience and privilege within your own ecosystem. So you have a fiat asset that has been converted at some point into either tokens or either products, and you rewards your ecosystem with other tokens that could be used in the same ecosystem. So brands guarantee depletion within the ecosystem and guarantee customer retentions. And lastly, brand can engage with the end user. So when you can trace your products along the secondary third markets, you also have a way to engage with your end user in a way that's, of course, you guarantee privacy of your user, but you still have an access to them through the traceability certificates you implement. Community members could have influence in the platform you built, whether it's a loyalty program for a luxury brands, whether it's actually a wine clubs, or it's a service, or it's a rating for hotels. Whatever community you have, if you really want to implement a Web3, then the governance should be shared with your users, and then having rewards and loyalty programs could be also have voting influence in the governance of your platform. So this is one example of how you could apply Web3 to existing real-world assets. Another example could be on services. So imagine your streaming platform that you provide online contents. There is a way you can tokenize and replace monthly subscription by package where you will be tokenized fiat currency into stable tokens, and those will be used on your platform on a real pay-per-use, let's say pay-per-second. Those can only be possible if you have a platform, a blockchain that guarantees nano payments with extremely low transaction fees, and of course stable transaction fees. You can't have volatility in your process or latency or throughput capacity issue. But if you have the backbone of your solution that actually guarantees scalability and low cost transaction fees, then you can also get nano rewards for those that enrich the contents. You're still these streaming platforms, and you will have consumers, users that will be rating. So today, your data, when you like something, when you comment something, you have no rewards on it. It's used by a single platforms, and there is no shared value, which is not what we talk about Web3. So if you monetize data, then you have to reward those consumers. So one way, of course, is through tokens, and you can rewards having either nano payments or rewards through nano payments. Of course, you need to implement digital ID managements within your solution for obvious data privacy reasons. The content could be transferred through different platforms. Interoperability of platform is a key question when you're building a Web3 business, and when you started to have digital asset business model. Initial content creators get rewarded along the chain, and each participant gets rewarded as well. This is echoing what we mentioned as decentralized ownership, where every creators add value to the communities and get rewarded for it. In terms of businesses and customer experience, you increase flexibility, and you have users that are absolutely using for what they really pay. So instead of having a monthly subscription where you might sometimes not watch or not connect to the platform, you will really use and pay your tokens. For cash flow revenues for the business, you still have initially fiat currency, fiat tokens that has been replaced by stable tokens. So you still have cash flow managements for the platforms, while you users and you have greater flexibility. And this is what we have been asked to work on many use cases with, of course, platforms for streaming platforms, online videos, movies, as well as telecom and mobile phone platforms. Of course, if you increase service and flexibility, you started to improve your KPIs on customer lifetime values. Implementing a blockchain solution allows you to have, of course, permission data versus permissionless blockchain, and you can manage the level of privacy and anonymity you want to have. So you should be able to remove any private information on an immutable ledger. This could be done, of course, with different data integrity platform we also developed, which guarantees to be GDPR compliant. And most importantly, if you have such a Web3 implementations where user participates to the community and participate to sort and be rewarded and encouraged to add values to the content, you limited as well impact or algorithm, and governance is decentralized, to the contrary of some of the platforms that I won't name right now, but you all know what I'm talking about. So brands generates customer engagement, reinforce loyalty, and that's not new source of revenue, but that's how you secure your revenue by using Web3 business application. One of the topics that's at nChain we work a lot, and we have a lot of project going on. It's a central bank digital cash. So one of the most discussed form of digital assets is to replace a currency by a digital assets, but we believe that's to be by central banks that actually issuing a pure digital form of cash. It allows citizens to have access to the same way of cash, meaning in a way that it's private, it's anonymous. You still have a transaction between two peers, and you don't need traditional bank systems such as bank accounts or credit cards. In some countries, you have only 60% of the population that actually have access to bank accounts. So you need to give access to the digitized economy to those who are left unbanked. So one of the big use case we work at nChain is our central bank digital cash. So it starts with the central banks that have a hybrid model. So it uses a platform that give, of course, permission to the central bank to issue, monitoring, confiscating, burst any type of tokens, and have control, of course, of their monetary. They will issue a digital currency that is programmable. It's actually the API, and it will be UTXO-based, recorded on a public ledger. Open public blockchain that is resilient, secure, compliant, and most importantly, transparent. Users who don't have a bank account could either use a payment interface providers when they can convert their fiat or physical money into digital money, and get through a wallet, of course, I recall deterministic wallet, they can get the digital money, and they can pay directly with the merchants. So the system we're building as a digital cash allows as well payment even offline. So the users might not need to have a smartphone, they actually use the terminal of the merchants through NFC, a near-field communication device, and he used the connection of the merchant to record it on the blockchain. And the transaction can be done offline as well. So we've been working on different proof of concept and different MVPs with countries in West Africa, where you have a large amount of population that have phones, smartphones, but not necessarily have access to bank accounts. So developing with the central bank such solution not only supports financial inclusion, but give access to a large amount of population to the digitized environments and economy. So we believe digital assets such as digital cash, instead of being purely speculations, could be as well a virtuous path to reduce inequality. It drives financial inclusion, it allows financial education. It actually gives users access to the notion of debit deficit, which with physical cash is impossible. So you can start to improve the way people can process transactions. You preserve them as well as physical cash can be easily stolen when digital cash, of course, is protected by HD wallets. Privacy of individuals is guaranteed, such as physical cash. They use a pseudonym as they process through blockchain. And one very important point is in those countries where we work with the central banks, the majority of the transactions is below $1. So if you come with gas fees at $8, obviously don't score works. So you definitely need to provide a solution where transaction fees are a fraction of a cent of a dollar, which is the case with BSV. You need to provide, of course, throughput capacity and volume. It gives also resilience to the economy, not be depending on physical cash, and give more control as well, avoiding black market, grey markets, tax evasion. You can imagine a system when you pay to the Martians, you automatically deduct the VAT from the payments, imagine. And you have traceability and transparency of the movements on the cash, which is a major issue in some of those countries. So this is an example of what could be digital assets as well in the Web3 environments. Some other use case, you can imagine rewards positive behaviors. You could have NFC tags on can or bottle, and every time I recycle my bottle, I get nano rewards. So I'm encouraged actually to recycle my bottles. Extra flexibility subscription managed. As I say, it's cash flow management for brands as the money stays within the ecosystems through the tokens, but more flexibility for the users. Crowdfundings, any project you may have, you could have access to crowdfunding that is protected through a decentralized autonomous organization. Those are subject to high regulation uncertainties, but definitely this is an example of how you can support in a Web3 environments. When I say Web3 is to remind that it has to be share value and decentralized value for users. And tokenization as a service, multiples pay-per-use options that could use tokens actually to provide greater flexibility. A little bit sided from this conversation, I also wanted to emphasize that the best way to make more money is actually avoiding losing some in either losing money in fraud, legal disputes, or actually counterfeit. So data integrity, which is possible with recording data or a hash version of a data on a public ledger, guarantee you different type of protections against frauds. For example, iGaming industry has been fined last year over 4 million for not protecting their players and into disputes about transaction. So if you implement e-certificates such as single player views with different KYC, KYB, AML onboarding process, and you have a compliance solution with regulation, you protect your players, you can prove you protect your players, then you are going to save enormous amount of money in fraud and fines. Data breach cost in 2022 reached 4.35 million. Actually, for company, this is an average estimation. If you protect your data with data integrity platforms against misuse or stolen recalls, stolen emails, or breach, this is also a way to secure, avoid losing money. Compromised credential was the most common initial attack vector in 2022. So again, having digital identity management that is backed by blockchain technology, of course, it has to be a public, immutable blockchain that is guaranteed the highest level of security. then you can preserve your credential and you can avoid such type of legal fights. And lastly, probably the most speaking explanatory example is counterfeit. So loss generated for brands with counterfeits was estimated, it's an estimation obviously, but $500 billion last year by the US Chamber of Commerce in Shanghai. So I'll let you imagine if you can provide in any products an e-certificate that can be easily updated. Is this watch real? Has it been stolen? Where it has been from? How many owners has been? Or it could be also traceability on what you're reading, as we have a use case this morning. Or any type of products when you have a life cycle solution that can be implemented. So those are examples of Web3 development of digital assets that actually back real world value and can generate additional revenues for existing brands and business. About us very briefly, so nChain, we were founded in 2015. We have our first node implementation in 2018. We launched our data integrity platform in 2021. We have 4 locations. We base our HQ in Zug, Switzerland. We have also a main office in London and 2 offices in Slovenia. We have more than 200 researchers, engineers, DevOps working, which allows us to be one of the leading blockchain technology companies. We rank 7 globally in the world when it comes to the number of intellectual property patents, and we have more than 1,000 white papers that has been recorded. Last year, we've been awarded about Global Top Innovator by LexisNexis. We also give access to our technology through smart pools. So we have 2 smart pools. The first one was a blockchain part smart pool that has been done with IPv. Actually, I believe IBM is also joining this smart pool patent, where we give access to more than 1,280 patents where startups and small and medium company can have access. So it's very cost affordable. If your company do not generate more than 1 million revenue, it's free. You can use our technology for free. And above that, we have very extremely interesting package. For us, the purpose is, of course, to drive adoption on BSV. And we will be launching at the end of the year the Ranot protocols. That's where we aim to reach 100,000 transactions per second. Today, we scale at 50,000 transactions per second. To give you an example, Visa today is 50,000 transactions per second at scale. With our situation right now, we're not at scale. We perform about average of 3 million transactions per day today, and we represent 40 to 60% of the volumes of transaction every blockchain together. So energy consumption efficiency, even if we are a proof of work consensus, we have unlocked the size of our blocks, which allow us to have a large amount of transaction per blocks and consequently reduce the amount of energy per transaction. We believe in the Internet of Value and blockchain as a utility, not as a speculation tool. And as I explained, we have the highest volume of transaction per day, and we have scored the highest number of transactions per blocks. So what we do is we have an open source blockchain, BSV. We will be hopefully very soon launching Terranode protocol. We provide enterprise support. If you want to build your solution on BSV, you can always reach us. It's an open source, but we always have enterprise support to help build on BSV. We have a data integrity platform, which notarizes, certifies, records, and encrypts with a salted hash Merkle's signature system, every type of data on the public ledger. And we have layer 3 application where we can develop as well your interface, domain app, and we specialize in fintech, gaming, supply chain, government technology, and healthcare. So I hope you will join BSV. And if you have any question, as I believe the time is a little bit short, you can always let me know if you have any question now or talk to me after this presentation. Thank you.
Czy są jakieś pytania z sali?
Yes. Before you ask the question, I want to introduce Alessio Pagnani. He's one of our top researchers. So if it's too technical question, he will be answering.
Okay, thank you for your presentation. My question will be about tokenizing service. As you mentioned about instead of paying a subscription, we are paying as a tokens and receiving nano tokens as a reward for providing any feedback from us about let's take an example, be some movie streaming platform like Netflix with using tokens. How is this service protect from some stuff like, for instance, there's a user who just going through every movie, every TV series and just providing any output, any rating, and just putting so many feedback that he is like getting like a spam attack, something like that. That is just these tokens are getting so huge value that he can actually like do it for free. Or maybe this nano tokens reward is not that big as I think, and he is unable to get so many reward that it will be bigger than the initial subscription.
Yeah. Well, the first way is, of course, to manage the digital ID, so to make sure you don't have liking farms in China sending millions of likes for a movie first to start. So you have to manage the credential when they're actually onboarding on your platform. The second solution would be the rules you implemented. So if you look right now, for example, Google Maps, if you put a review, you will have other users that say they find your review interesting or they dislike your review. So an algorithm could be based on how the other community finds your comments interesting or accurate or not. That's an example. For example, I don't have the answer, as this is not our business model. This is an example of how you could rewards. But again, the idea is to be able to provide nano payments on a high frequency. But all the rules could be decided by Netflix, obviously.
Thank you. One question that I have, you've mentioned that the payment process using blockchain, that you used an example of offline payments, and I'm really interested in how such a system would prevent double spending.
Yeah. Okay. So I will briefly answer that we use pays to merchant, and then we use a connection to record on chain, and this is a UTXO process. But I will, Alessio.
Okay, yeah, there is a risk of double spending, of course. So the idea is that either you have an ID, so this is based on a UTXO blockchain, so you sign the transaction. So if it is linked to an ID, you can always prove who double signed the same UTXO, and so I can sue you, for example. And this is if the transaction is linked to an identity. If that's not the case, usually we allow offline payments for small payments, so you're not incentivized to double spend. So if it's for a coffee, you can create an offline transaction peer-to-peer. So if I want to buy a coffee from her, I'll just hand over my transaction to her and she can broadcast them. And she trusts it, like when you pay with contactless with your credit card. There is a sort of trust. If you're on an airplane tapping your credit card, this is not recorded immediately, so the company trusts that the transaction is true. If the transaction is higher volume, in that case, we usually don't allow offline payments. So if you're buying a house, there's no offline payment.
Thank you. And another thing is that you've mentioned a lot about intellectual property patents and also about things being open source. And I would like to inquire you about the interplay between those.
Yeah, I will let Alessio answer. I just wanted to clarify with the offline payments. So this solution is for when you're actually, if you're offline, so you have to be facing physically the merchant. So you're using the merchant connection actually to record the transaction on chain. The case scenario where both do not have access to connection means you're physically actually tapping your phone. So you have actually knowledge of who you're transacting to. So yes, it's not as robust as where you can actually instantly record online, but this is still somehow guaranteeing the same way you would do with physical cash. And so on the question.
I didn't get the question.
Sorry, could you repeat?
Can you repeat the question? Sorry.
The question was about the interplay between intellectual property patents and the solutions by nChain being open source. There's two, opposite sides of the same coin, and I really interested about how they intersect.
No, so okay, the open source the open source code is for the blockchain implementation. So and this is open source because everyone has to read the code and make sure that it is valid, and this is not patented. What we patent is our solutions. So that Valentine was explaining the layer 2 solutions, all the techniques that we use to build and innovate on the blockchain, those are patented and you can access to them using the IPv portfolio.
Okay, thank you.